by Sky News business regular Roger Montgomery. I should call you a Switzer regular. Sky, I bet you are another. Apparently you're another program.
I'm happy with both.
Okay, right.
Happy with both.
Okay, fair enough.
Whichever way, we'll Switzer regular tonight now.
Yeah, exactly right. Now, where's my mic here? Just better sort this out. Now, we talked about A1s being cream of the crop. You have made the point that A1s aren't necessarily blue chips.
Well, using conventional...
Some blue chips are cream of the crap, aren't they? According to you.
I like that.
Yeah, I know you have that.
I like that. I wouldn't use that on TV, but it's your show.
Yeah, it's my show.
Yeah, exactly. Conventional wisdom says that blue chips...
Criticising my program. Okay,
Criticising your program.
Fair enough.
If you want to say French...
I want to use French. You a bit of crap, so fair enough.
If you want to use French on your show, it's your show.
Yeah.
A1 businesses aren't the conventional blue chips. Blue chips are seen as they're big companies. They've been around. Typically, people talk about regularity of dividends, large market capitalisation.
Can I say that a lot of people think Wesfarmers is a blue chipper, but you don't call it
Qantas.
A1.
People have called Qantas a blue chip.
Yeah.
They've also called Qantas a defensive company. Anything but defensive.
Yeah.
Anyway, so conventional wisdom. Long on wisdom, short on convention.
Yeah.
Short on convention, both.
Okay. Both
no
works.
good.
Yeah.
So what we're interested in is any size business could be, in my eyes, a blue chip. It doesn't matter what size it is.
Your A1 blue chip.
An A1 business.
Let's put that there, A1 business.
And I class companies, I've said this before, I class companies from A1 down to C5. So A1 is a business that I think has the absolute lowest probability of what I call a liquidity event. So the lowest chance of having to raise capital, the lowest chance of needing to borrow more money, the lowest chance of defaulting on any debt that it has, breaching a banking covenant or a debt covenant, the lowest chance of needing money or going bust.
Yeah. So even though it's a risky game, the stock market game, these are the lowest risk type businesses.
Yes. Now, what's interesting is, forget about intrinsic. I talk about buying things below intrinsic value, so buying them below. Someone on my blog did the very kind service of actually taking all of the A1s that have been mentioned on the website and going back 5 years. Now, there's look-back bias when you do that, obviously, because you're looking at stocks that have survived by definition. You're looking at them today and you're going back in time. So that aside, they looked back and they said, OK, well, how would a portfolio of these A1s have gone over the last 5 years? And obviously, I'm not predicting that they'll do this in the future, but it was 60% per annum, just the A1s. Now, the A2s had a slightly lower return over. Which
you'd expect if your criteria for assessment.
Yeah, exactly. But the A1's 60 odd percent over per annum over the last 5 years. So I was encouraged by that, and you've got to do contemporaneous testing, which basically means you've got to go back in time, assess the companies that were alive back then, and see whether or not any in fact went bust and you did your money on them.
This is a question without notice, but I know you can respond like a heavyweight boxer.
Well, only because I do this.
But what was the most memorable A1 company that surprised you on the downside? Have you got one? There must be one. I have to admit, I've only been doing the A1, A2, C5 thing for this calendar year, really, So
not even.
This has been an improvement on methods you've used in the past.
I've never done this before. Yeah. This is all brand new.
Yeah. But you always had unusual techniques to, like Reject Shop was a company that you selected.
Long time ago.
Yeah, but was the criteria that you used for Reject
ROE,
Shop? Yeah.
Return on equity, that was it.
Okay.
There's 30
you really
different...
have improved your selection process.
Well, there's 30 different criteria to go into an A1 to a C5. It's just chalk and cheese.
So you've reinvented yourself. You've really gone into self-improvement, haven't you?
Oh, well, I had the time. I had the time to do it. So that was a good thing.
So people who pun on you in the past, that was during your lazy period. This is your energetic and...
Yeah, well, my wife's punting on me now, so she gets the maximum value.
Okay.
So the interesting thing is that there seems to be a good correlation between performance and quality of the company. And now imagine the outboard engine you can put on the back of this boat if you just decide to buy A1s when they're at a discount to intrinsic value. Now, what you've asked me to do is to put together a list of A1s put together a list of A1 companies, irrespective of whether they're cheap or expensive. We'll just go through what I think are A1s that are going to continue to be A1s in the next 12 months.
Yeah. These are A1s who are future A1s as well.
Well, yeah, what we're interested in is consistency of performance.
Okay.
So a business could be an A1 this year, but it might be a B2 next year, or it might have been a B2 last year and it's an A1 this year. I'm looking for the companies that have consistently been A1s or A2s over a longer period of time. So they're the ones that I think are most likely to be next year as well.
Okay, so are the A2s expected to be A1s? Because you've got an improvement in them, or
not necessarily.
You're not going to gamble and be 7%?
No, I don't speculate about these things.
Okay,
I just go with what we know.
Okay.
In fact, there's been a bit of dialogue about that recently. You know, you can speculate about all sorts of things without realising you're actually speculating and not investing. It's best to deal with knowns, and it's enough to try and work out what these companies are going to earn next year.
Okay.
Let alone predict whether or not all those ratios are going to be such that they're going to be A1s again.
How many companies are we going to mention?
Well, there's probably 10 to 20 here.
Okay, let's go
through them quickly.
Let's go through the most obvious ones and the ones that deserve a bit of discussion.